Thanks. So we're going to stay with retail and really hone in on those luxury retailers. Our next guest says luxury retail is in a depression that will never turn around, and the industry is going to shrink tremendously as a result of this depression. We're joined by Howard Davidowitz, chairman of New York-based consulting and investment banking firm Davidowitz and Associates. Welcome.
Thank you.
So a depression that's never, ever going to turn around for the luxury retailers. Why do you say that? That's pretty drastic, pretty severe.
We're going to shrink the sector tremendously, Carol, just like we're shrinking financial services forever. Bear Stearns doesn't exist. Lehman doesn't exist. Merrill Lynch is a shadow. Citi's a shadow. I mean, it's going to shrink forever. Look, will Neiman Marcus get through 2010? Their comp store sales are down 30%.
Right.
The analysts are dancing in the aisles over Saks. I mean, they've lost $150 million in the last few quarters. That doesn't sound too one. And by the way, their comp store sales are running down 25 to 30%. These are not sustainable. Barney's in New York had to be bailed out by Ishtamar, or they would have filed bankruptcy. So that's where we are.
I hear what you're saying. Maybe it's just indicative of what's been going on. There's been so much excess in the market. You know, take the autos, take the financials, pick your group. Too much excess in the system that everything's got to kind of be brought back. Maybe that's true for luxury retail, but it sounds like you're saying it's going to go away.
It's not going to go away. I said it's going to dramatically be reduced. If you look at the department store sector, they're the one sector that carries luxury.
But you say it's in a depression that will never turn around.
Never turn around. In other words, we will never be the same ever. Listen, we've borrowed $3 trillion in the last few months over Mr. Obama, who's taken our money, putting it in the sewer, bailing out Chrysler, which is impossible. You're selling 9.5 million cars in autos against 17. You're still going to have 3 auto companies? Spare me.
Okay.
There's no...
Wait, we're talking retail, though. We're talking
retail. That's retail cars.
Right, that's true.
But forever, here's why it's forever. When you get your debt up to the same size as GDP, exactly where we're going, of course, we're going to have, then what you got is 8% interest on that debt instead of the 4% we pay now. We're borrowing to pay the interest.
So you're saying people aren't going to have the money to spend $2,000 on a pocketbook?
Ever.
Yeah, but we've got a story that spending by wealthier Americans on luxury goods and services jumped by a fifth in the first quarter, fueled by store promotions and pent-up demand. But people are going out and they're still chalking up whatever it is to buy that $2,000 handbag or whatever.
I didn't say we're going to have no luxury.
Okay.
I said the sector is going to shrink and never expand again. It can't expand. Living standards can never be the same when we're Venezuela and have $14 trillion in debt, which is exactly what we're doing.
I want to bring Mark into this. I know you've been down and jump in. Mark.
Mr. Davidowitz, I just wanted to ask you, if Americans aren't going to be spending their money on luxury, where are they going to go?
Excellent question, Mark, and that's the key. The first thing they're going to do is save. We're losing 600,000 to 700,000 jobs a month, and now we've gone from spending 6% more than we've made for a decade. Savings is now up to 4.5%. Our projection, that will go to 10. That's why we're going to close 200,000 stores in America. That's why commercial real estate is heading into a depression. That's why credit cards are heading into a depression. Consumers are not going to spend. Look, I've got a home in Tokyo. They had 7 stimulus. 7 of them.
Right.
The Nikkei was 35,000. It's now 9,300.
So you think we're just another Japan?
Absolutely. We are mimicking their plan to the letter.
Right. I want to bring it back to the luxury retailers. So Tiffany, it's up 56% from that March 9th low. Coach is up more than 100% from that March 9th low. Saks is up more than 200% since March 20th. Nordstrom's up 73%. You think investors are crazy? They shouldn't be putting their money into those stocks.
I didn't say they're all. I say that Coach, with affordable luxury, has a sustainable concept. In the jewelry business, we're closing 2,000 jewelry stores.
But Tiffany will stay around? I mean, Warren Buffett's been buying Tiffany bonds. And
you didn't see me here point out that Tiffany would disappear.
Okay.
By the way, earnings are down 70%.
Okay.
Before you start dancing in the aisle.
But they'll be around.
They'll be around. Bulgari lost $40 million. Fortunoff's is not around. Whitehall Jewelers is not around. We're closing 2,000 jewelry stores.
So bottom line, you just weed out the weaker players here.
You weed out the weaker players. The size of the sector gets a lot smaller.
Well, Saks going to be around in your view? 5 seconds?
It's at risk. So is Neiman Marcus, the 2 biggest. I didn't say they're going to disappear, but they're at risk.
Okay. Got to leave it there. Howard, thank you.
You're welcome.
Howard Davidowitz, always